Every now and then, you come across someone in your life who is so successful. Someone you wish you could just spend 5 minutes with, just so you could learn from them. Someone who truly stands out. And when it comes to investing, there is one person who is in a league of his own. Every time the stock market crashes, every time people lose money, he always manages to come out on top. So how is this? How is it that one investor is able to make the right decision over and over again? And if you don't know who I'm talking about by now, I'm talking about one of the greatest investors of all time, which is Warren Buffett. So in today's video, I'm going to go over exactly how he built his net worth up to $79.5 billion using 4 investing strategies. It's not like he started off with any more money than you or I did. So I'm going to go over exactly what these 4 investment strategies are and how you can implement them into your life so you can build your net worth as well. Hey guys, before we get started, it says that 95% of you watching this video are not subscribed to my channel. So if you'd like to stay up to date on the news, on the stock market, on how to make money in general, well then please be sure to subscribe so you can be notified when new videos come out. Anyways, today we're going to go over the 4 investing strategies that have made one man $79.5 billion. So imagine what it could do for all of us. So anyways, let's go over the first investing strategy, which is invest in what you understand. And the way Warren Buffett describes this is to invest within your circle of competence. So what this means is that you don't need to be an expert at everything. No one can know every single stock in the stock market. You just need to know what you're good at, what you like, because if you are an expert in a small area, that's enough. If you are an expert in 10 companies, that's enough. You don't need to know every single company. Just invest in what you understand. One example of this is that Warren Buffett did not invest in Microsoft early on. He was best friends with Bill Gates. He knew Bill Gates, but he didn't understand the company, so he didn't invest in it. So that is what he means by invest in what you understand. Even if something looks great, people are saying it's great, you can't invest in it unless you understand the company. So really the best way to go about this is if you're a beginning investor, find something you like. Look at the companies in that area, that sector, because then you'll understand everything about those companies. You'll want to learn everything about them. So that's where you should invest your money. You shouldn't invest your money in something that is completely foreign to you, something you don't understand, because then you're putting yourself at risk. So invest in what you understand. Moving on, the second aspect of Warren Buffett's investing strategy is to invest in companies with favorable long-term economics. What does this mean? What does favorable long-term economics mean? Well, essentially, you want to invest in a company that has a competitive advantage, has some sort of asset that no one else has a powerful brand. It has to be that a company you invest in has something that no other company has. This way, in bad times or in good times, this company can succeed. Because companies that are favorable long-term can weather the bad times and they can succeed in the good times. It doesn't matter because they have something that no other company has. One example of this is Warren Buffett has invested in Coca-Cola for years. And it's not like they have a special recipe. Because if you look at it, according to studies, Coca-Cola, it doesn't taste as good as maybe other products, but it tastes better when people know it is Coca-Cola. So it has a powerful, powerful brand. So you have to look for a company that has something, whether it's the brand, whether it's an asset, whatever it is, that company has to have something that no other company has so it can weather the bad times and it will be around for years and years to come. Third point of this investing strategy is that you need to invest your money in a company with able and trustworthy management. You don't want to put your money in a company with people who are untrustworthy, because think about it. It takes 20 years to build up your reputation, but it only takes 5 minutes to completely destroy it. So if you invest in a company that doesn't have trustworthy management, they can make one decision in a minute that can ruin your whole investment portfolio, ruin the company. So you need to make sure that they are able and trustworthy so that you know that your money is in the right hands. And Warren Buffett has proven time and time again that he won't invest in a company just because it's a great deal, just because he thinks it might do well in the long term. It has to be that he trusts the management, because one decision of the management can cause the company to go out of business. It could cause the company to turn for the worse, and you can't really change that. You need to have a strong core in whatever business you invest in. The fourth point of Warren Buffett's investing strategy is that you only should invest in a company that is available at an attractive price. And this goes down to his famous quote, is that price is what you pay and value is what you get. So when you invest in a company, you want the price you pay to be less than the value you get. You want to make sure you're getting a good deal for your money. That's what this means. You don't want to overpay for something. You want to make sure you're getting it at a good price and it's a good deal. So with these 4 strategies, anyone can increase their net worth. Whether you're Warren Buffett and you built your net worth up to $79.5 billion, or whether you're someone with $5 in your bank, because you just want to start investing now. Start investing as soon as you can because time is your friend when investing. You can take advantage of compound interest and returns over a longer period of time. So when starting to invest, whether you're a beginner, intermediate, whatever you are, keep these 4 investing strategies in mind when investing because they've worked for Warren Buffett, and really it comes down to the basics of investing in solid companies that are available at good prices that have good management. With that being said, I hope you guys enjoyed today's video and took some value out of it. If you have any questions about investing or the stock market, please be sure to leave it in the comments down below and I'll answer as many questions as I can. Thank you so much for watching. Don't forget to get your 2 free stocks valued up to $1,400 when you sign up for Webull investing app using the link below. 1 free stock when you sign up for Robinhood. Thank you so much for watching. Please be sure to like the video down below, leave a comment, and subscribe, and I'll see you guys next time.